Welcome back to the Pro Ticker Podcast. It is Thursday morning, and we're covering all those major financial magazine headlines. We got a stack of articles from the Wall Street Journal, CNBC, and Bloomberg today. And let me tell you, things are getting spicy.
Oh, yeah. Always a lot going on.
We've got a hedge fund founder facing some serious prison time, a billionaire, caught up in some really shocking accusations, and one company's valuation skyrocketing. But it's built on a house of cards.
Lots to unpack today.
Let's dive in.
Sounds good.
Okay, let's unpack all of this. Started with the Bill Hwang case. The Wall Street Journal is all over this one. To refresh everyone's memory, Hwang is the founder of Archegos, that family office that imploded last year and took $100 billion in market value with it.
Yeah.
And now he's been sentenced to a whopping 18 years in prison.
Wow. That's a landmark case. I mean, it's the longest sentence ever handed down for this kind of financial crime.
Yeah.
What's interesting here is that the judge isn't just punishing Hwang for the losses themselves, but for what he sees as a blatant disregard for the rules.
Oh, that's interesting.
The whole case hinges on the use of these complex derivatives Hwang was using to amplify his bets.
Okay.
It's like he was playing financial Jenga, stacking risk upon risk until it all came crashing down.
Right, and the crash wasn't just his problem.
Right. Oh, definitely not.
Major banks, like Credit Suisse, got caught in the crossfire. They were lending Hwang massive sums of money, enabling these risky bets.
It's a stark reminder that when these big players stumble, the whole market feels the tremors.
Exactly. And now, as the Wall Street Journal points out, the regulators are getting involved.
Okay.
The SEC is pushing for tighter rules around family offices. You know, they manage trillions of dollars, but they fly under the radar compared to hedge funds.
Right.
This case is shining a light on the potential risks and pushing for greater transparency.
Transparency is good. It's almost hard to wrap your head around the scale of it all. The Wall Street Journal mentioned that Hwang personally lost $8 billion in just 10 days. 10 days.
Yeah.
I mean, talk about a bad week.
Oh, yeah. That's rough. His lawyer argued that he lost it all, but still, 18 years is a long time to reflect on those losses.
Definitely.
Do you think this sentence will really deter others from taking similar risks?
It's hard to say. Greed is a powerful motivator, and Wall Street has a long history of pushing boundaries. But I do think this case sends a strong message. It's a reminder that the consequences of reckless behavior can be severe, not just for the individuals involved, but for the entire financial system.
Okay, let's shift gears and talk about NVIDIA. CNBC is reporting on their latest earnings, and it's a bit of a mixed bag. On the surface, things look great. Revenue is up 94% year over year.
Wow, that sounds pretty good.
But if you dig a little deeper, you'll see that growth is actually slowing down. And that seems to be spooking investors, especially in Asia.
So what's fascinating here is that the market is reacting to the trend, not just the numbers themselves. NVIDIA is still putting up huge numbers, but that slowdown in growth is making people nervous. Are we at the peak of the AI boom? Is demand starting to taper off? These are the questions investors are grappling with.
It's interesting how different regions are reacting. CNBC also mentioned the European markets seem less concerned. With NVIDIA's performance, they're more focused on the ongoing conflict between Russia and Ukraine and President-elect Trump's trade tariffs. It feels like every corner of the world is on edge right now.
Absolutely. And as we saw with the Archegos case, these seemingly isolated events can have ripple effects across the global market. Political instability, trade wars, and even a slowdown in one tech company's growth can impact investor confidence and send shockwaves through the entire system.
Speaking of political instability, Bloomberg has a piece on the rising tensions in France. The market is getting jittery about the country's budget negotiations and an upcoming rating review by S&P, apparently. Marine Le Pen is digging in her heels and opposing the governments.
Proposed budget cuts. Yeah, this situation is a prime example of how politics and economics are inextricably intertwined.
Right.
France is facing immense pressure to reduce its deficit.
Well,
The government is proposing significant tax hikes and spending cuts, which have ignited fierce opposition, particularly from Le Pen's far-right party.
wow.
And with a potential no-confidence vote looming, the stakes couldn't be higher.
It sounds like
Yeah.
France is walking a tightrope if the government collapses. It could throw their entire economic recovery plan into chaos.
Yeah, it could.
Do you think the market is overreacting, or is this a legitimate cause for concern?
I think it's definitely a situation to watch closely. Yeah. France is a major player in the European economy, so any instability there could have widespread repercussions.
Right.
And when you add in the global uncertainty, we've already talked about, it's understandable that investors are feeling nervous.
Now, this next story is a real head-scratcher. CNBC is reporting of some serious accusations against Gautam Adani, the chairman of the Adani Group. He's one of the richest men in the world, but now he's facing charges related to a massive bribery and fraud scheme.
Yeah.
Talk about a fall from grace.
Wow. The U.S. indictment alleges that Adani and his associates were involved in a $250 million bribery scheme to secure solar energy contracts.
Wow.
It's a shocking development, especially given Adani's prominent position in India and his global ambitions in sectors like renewable energy.
Right. Market reaction has been swift and severe. CNBC mentioned that Adani Group share prices have plummeted, and they even had to cancel a $600 million bond sale.
Yeah, saw that.
That's a clear sign that investors are spooked.
Oh, yeah, for sure.
What do you think the long-term implications of this case could be?
I think this case has the potential to shake up India's renewable energy sector. The Adani Group is a major player, and if these allegations are proven, it could cast a long shadow over the entire industry.
Wow.
It also raises questions about the future of the Adani Group's global expansion plans.
It's a fascinating and unsettling story, all at the same time. Makes you wonder, who can you trust these days?
Right.
Speaking of trust, or maybe the lack thereof, let's talk about Elon Musk. The Wall Street Journal has a piece on his cozy relationship with the incoming Trump administration. Tesla stock is soaring, and Musk's influence on policy seems to be growing by the day.
Musk was a vocal supporter of Trump during the election, and now he's reportedly playing a key role in the presidential transition.
Okay.
This close relationship has sparked a lot of speculation about Musk's potential influence on policy, especially in areas like technology and AI regulation.
It's certainly an interesting dynamic. On the one hand, you have Musk and Trump seemingly aligned on many issues, but on the other hand, you have European leaders like French central bank chief Villeroy de Gallo expressing concern about potential protectionism under a second Trump presidency, it feels like.
We're heading towards
a more fragmented and unpredictable world.
Yeah, that's a great observation. We're seeing a divergence in viewpoints and priorities, which could lead to increased global tensions and trade disputes.
Right.
The uncertainty surrounding Trump's policies, combined with his close ties to figures like Musk, creates a challenging environment for international businesses.
It's like a game of chess, where every move has the potential to trigger unforeseen consequences.
It really is.
And speaking of risky moves, let's talk about microstrategy. The Wall Street Journal is profiling their unconventional strategy for capitalizing on the Bitcoin boom. They've gone all in on Bitcoin to the point where their stock price is almost entirely dependent on its performance.
Yeah, MicroStrategy's approach is definitely raising eyebrows among traditional investors. They've even invented their own metric, BTC yield, which measures the change in the number of Bitcoins they own per share.
Wow.
It's a high-risk, high-reward strategy. That has paid off handsomely so far, but it's also made them incredibly vulnerable to Bitcoin's volatility.
It's like they've strapped themselves to a rocket, hoping it blasts off to the moon. But what happens if it explodes on the launch pad?
Yeah.
That's the risk they're taking.
Yeah, big risk, big rewards.
It's a fascinating case study in risk tolerance and the allure of these emerging asset classes. They're essentially betting the farm.
Yeah.
On Bitcoin's continued rise, do you think other companies will follow their lead?
It's hard to say. MicroStrategy is definitely an outlier, and their approach is not for the faint of heart.
Right.
But if Bitcoin keeps going up, they'll look like geniuses.
They will.
And that could tempt others, dip their toes in the water.
This whole Bitcoin phenomenon is so fascinating. It's like a parallel financial universe operating outside the traditional systems. And it's growing at an incredible pace.
It is, and it's raising a lot of questions for regulators, policymakers.
For sure.
How do you regulate something that exists primarily in the digital realm? How do you protect investors
from scams
and fraud? These are uncharted waters.
Uncharted waters indeed. It feels like we're at a crossroads with traditional finance on one side and this decentralized world of cryptocurrency on the other. Where do you think this all leads?
It's hard to predict the future, but I think we're going to see a convergence.
Okay.
The lines between traditional finance and crypto are already blurring. And that trend will likely continue. We'll see more companies experimenting with blockchain technology, more institutions investing in digital assets, and more regulations aimed at bringing some order to the Wild West of crypto.
It's an exciting time to be following these trends, that's for sure.
It is.
Okay, let's circle back to NVIDIA for a moment. The Wall Street Journal has another piece on them, this one focusing on their phenomenal growth and dominance. In the AI chip market, they've become a true tech behemoth. But the market cap, that's now bigger than Alphabet's.
Wow. NVIDIA's success is a testament to their vision and execution. They saw the potential of AI early on and invested heavily in developing the chips needed to power these complex systems. And now they're reaping the rewards as AI becomes ubiquitous across industries.
The Wall Street Journal mentioned a fascinating detail. NVIDIA's market cap growth this year alone is bigger than the entire current value of Alphabet. That's just mind-boggling.
It speaks to the transformative power of AI. We're in the early stages of an AI revolution, and NVIDIA is positioned at the forefront.
Okay.
Their chips are the engines that are driving advancements in everything from self-driving cars to drug discovery to personalized medicine.
As with any company at the top.
They're facing some headwinds. The Wall Street Journal also pointed out the growing competition from rivals like AMD, and there's always the looming threat of antitrust scrutiny.
Yeah, those are valid concerns.
Okay.
NVIDIA's dominance has attracted attention from regulators, and they'll need to be careful to avoid any anti-competitive practices.
Right.
And as the AI chip market matures, we'll inevitably see more competition emerge. They're also grappling with the impact of those U.S. restrictions on shipments to China.
Right.
That's a major market for them.
Absolutely. The restrictions have forced NVIDIA to develop less powerful chips, specifically for the Chinese market, to comply with regulations. And it's created an opening for Chinese chip makers to try and catch up.
It's fascinating how these geopolitical tensions are playing out. In the tech world, it's not just about innovation and market share anymore. It's about national security and strategic advantage.
It's a whole new level of complexity for companies like NVIDIA to navigate. They're operating in a globalized world where the rules of the game are constantly changing.
And speaking of changing rules, remember those tariffs President-elect Trump has been talking about? The Wall Street Journal mentioned how NVIDIA CEO Jensen Huang addressed this during their earnings call.
Oh, yeah. Huang took a very cautious approach, saying they'd comply with whatever regulations are put in place and support their customers. It's clear they're trying to stay on Trump's good side.
Which makes sense, considering how unpredictable he can be. No one wants to be on the receiving end of one of his infamous Twitter rants.
Exactly. It's a delicate balancing act. For companies like NVIDIA, they need to appease governments, navigate trade tensions, and stay ahead of the competition, all while trying to maintain their impressive growth trajectory.
Ooh, it's a lot to juggle.
Yeah, it is.
And it's a stark reminder that business is not just about numbers and spreadsheets anymore.
Right.
It's about politics,
Yeah.
geopolitics, and navigating a world that's increasingly complex and interconnected.
Couldn't agree more. It really is.
Yeah. It really makes you wonder, what does this all mean for the average investor? It feels like we're in this constant state of flux with risks and opportunities emerging from every corner of the globe.
Right. It's exciting and daunting all at the same time. So much is changing so rapidly, it's hard to know where to focus. Any advice for our listeners who are trying to make sense of it all? I think the key is to focus on the fundamentals. Don't get swept up in the hype. Look for companies with strong leadership, innovative products, and a track record of navigating challenging environments.
So basically, don't panic and do your research. Solid advice.
Exactly. And don't be afraid to diversify. Chasing short-term gains in volatile markets like cryptocurrency can be tempting. But as we saw with MicroStrategy, it can also be incredibly risky.
It's all about finding that balance.
Yeah.
Managing risk while still being open to new opportunities.
Precisely. And remember, knowledge is power. The more you understand about the forces shaping the global economy, the better equipped you'll be to make informed decisions.
I love that. It's a reminder that even in the midst of all this chaos, we have the power to educate ourselves and take control of our financial futures.
Absolutely. And don't forget, the financial world is rarely black and white. There are always multiple perspectives to consider, and it's up to each individual to weigh the evidence and make the choices that are right for them.
Well said. So as we wrap up this deep dive into the headlines, what's the one key takeaway you'd want our listeners to walk away with today?
I'd say stay curious, stay informed, and don't be afraid to question assumptions. The financial world is constantly evolving, and the only way to stay ahead of the curve is to keep learning and adapting.
Couldn't have said it better myself. Thanks for joining me on this roller coaster of a deep dive.
The pleasure was all mine. Always a fascinating conversation.
And for our listeners, we'll see you all tomorrow morning with new headlines from major financial magazines. Until then, stay curious and keep those portfolios diversified.
It really is. And it makes you wonder, what does this all mean for the average investor? It feels like we're in this constant state of flux with risks and opportunities emerging from every corner of the globe.
Right. It's exciting and daunting all at the same time. So much is changing so rapidly, it's hard to know where to focus. Any advice for our listeners who are trying to make sense of it all?
I think the key is to focus on the fundamentals. Don't get swept up in the hype. Look for companies with strong leadership, innovative products, and a track record of navigating challenging environments.
So basically, don't panic and do your research. Solid advice.
Exactly. And don't be afraid to diversify. Chasing short-term gains in volatile markets like cryptocurrency can be tempting, but as we saw with microstrategy, it can also be incredibly risky.
It's all about finding that balance right, managing risk while still being open to new opportunities.
Precisely. And remember, knowledge is power. The more you understand about the forces shaping the global economy, the better equipped you'll be to make informed decisions.
I love that. It's a reminder that even in the midst of all this chaos, we have the power to educate ourselves and take control of our financial futures.
Absolutely. And don't forget, the financial world is rarely black and white. There are always multiple perspectives to consider, and it's up to each individual to weigh the evidence and make the choices that are right for them.
Well said. So as we wrap up this deep dive into the headlines, what's the one key takeaway you'd want our listeners to walk away with today?
I'd say stay curious, stay informed, and don't be afraid to question assumptions. The financial world is constantly evolving, and the only way to stay ahead of the curve is to keep learning and adapting.
Couldn't have said it better myself. Thanks for joining me on this roller coaster of a deep dive.
The pleasure was all mine. Always a fascinating conversation.
And for our listeners, we'll see you all tomorrow morning with new headlines from major financial magazines. Until then, stay curious and keep those portfolios diversified.